Okay, great to have you here. Today we'll study market structure. It is a concept that helps you to make sense of the market moves and to create systemized trading strategies. In this video, you'll learn what is market structure and how it can be identified. So let's look at some theory first, and then we'll study chart examples in different time frames and markets. First of all, please do remember that we don't provide any investment advice, and all the material is made available for educational and marketing purposes only. And please remember to subscribe to the channel. That would be a great help. Thank you. Okay, you might know that markets move up and down in stages. First of all, you have a move higher, and then comes a retracement. Then buyers step in and we have another move higher, and now we move above this previous peak. So this is a potential area of market structure. So when the price comes back to the level, we observe it. If we see that the market touches it and then starts to move higher, then we have a reason to believe that yes, the buyers are participating in this trend here, and we have market structure being created. Then if we get another move higher, then obviously this trend is quite strong, and we get another market structure point here. This time, if the market moves back to the level, we kind of anticipate that something similar might happen than at the, in the previous low. So if the market now moves about this level and then starts to move higher again, then yes, we have another point, another higher swing point, or you could call this series of higher highs and higher lows. So this is basically what market structure is about. And yeah, that's basically an uptrend. So just to highlight this for you, I'm using boxes here. Here's one box, and then let's draw another one. These points are confirmed market structure. And obviously we have one point up here which hasn't been confirmed yet. The price hasn't moved back to the level, so we don't know if this level is going to hold or not. In the future videos, I'll explain you thoroughly how you can actually use this in your trading, but in general sense, we want to be buyers at levels where we think the up move might continue. So we have the uptrend and we want to find a level where we can participate in the trend. And these market structure levels are kind of very good candidates for this kind of participation. And if we see the market retracing back to these levels and then starting to move higher again, then we have evidence that buyers are coming in and we should join the flow. Never fight the market, always go with the market. Okay, let's talk about a downtrend next. So we have market making higher highs and higher lows in an uptrend, and in downtrend we have exactly the opposite situation. The market, let's start from the same point here. Let's say that the market comes down to the recent level of structure here, and then it bounces from it. But this time it creates a lower high. Now it's more likely to break this level and move lower. So now we have a break of structure here. So we have what could be a new start of a trend, this time a downtrend. So if the market returns back to the same structure or creates a lower high, meaning a high anywhere below this point, then we have a confirmation of a downtrend. So now it's more likely to go yet lower and break this previous support. And then if the market rallies a bit, it often finds resistance at the previous point of support, so at the market structure. And then comes another reaction lower. And this way we have more confirmation that the market is bearish. We get these breaking points, and we can use them to open short trades in this case. So when the market is moving higher, we want to be buyers. When the market is moving lower, we want to be sellers. And then thirdly, there are sideways ranges in the markets. So let's talk about those. If the market fluctuates between two levels, it's not really committed. The bulls aren't more committed than the bears, and the market could continue in a range for a longer period of time. Obviously, there will come a point when the market breaks out, but until then, we have a situation where we want to be buyers close to the previous market structure here. Just based on the fact that the buyers came in here the last time, we think that this might happen again. And if it happens, we have a confirmation and the price moves higher. And this might be something that, some people want to buy exactly at the support. Some people want to see a confirmation that, yes, the buyers came in. So it really is up to you what you want to do. But then once the market structure is confirmed, the price moves higher and goes back to the high end of the range, which is obviously the point of structure here. Eventually, there'll come a point when the market creates, let's say, for instance, a higher low. This increases the probabilities of the market breaking outside of the range. And sometimes we get a little bit of fluctuation at the structure level, and then finally the market breaks out. So now we have a very good understanding what the market structure is about in ranges, what the market structure means in downtrends. Let me actually move this over here so we can highlight this separately. So here we go. Here we have a downtrend market structure and another point there. And here we have, uptrend, downtrend, sideways moves. And obviously, when the market reverses, this is where we want to understand more about how to apply, how to use the market structure. Let me just give you an example before we finish. Let's say that the market has been moving lower. We have a downtrend here, market making lower highs and lower lows. Market is honoring the previous levels of structure and moving lower. But there will come a point where the downside momentum kind of starts to wane. It's not that strong anymore. The directional moves to the downside, they aren't as strong as they used to be. And this is where we have to start thinking maybe the trend is about to actually reverse. It's we at least have to kind of entertain the possibility. So at this point, we really don't know if the market is going to break above this structure point here. You can see how the market created a lower low, and then the same level was tested twice. So we don't know yet if the market is going to continue lower or if it's going to continue higher. But once we have a higher low in place, and especially after the market has moved beyond this previous level of structure, then there's a good chance that the market is reversing. Now the probabilities are quite high that we might actually see a reversal to the upside. And once you have something like this in place, where the market wasn't able to make new lows and violated the recent structure level, and then tested the same level again before bouncing higher, then we have a confirmation that the market now has reversed, and it is now more probable that the market will move higher than lower. And that's obviously where we want to trade long instead of trying to short the market. Now that you have a good understanding of what the market structure is about, we can take a look at some chart examples to give us more understanding on how the price moves around these structure levels and how we can use those in trading. Okay, let's take a look at the daily chart in gold. Here we have a market structure level, or rather it's an area. It's not really a level. It's more of an area. And the price found support here, but later on, once this area was penetrated, the same area acted as a resistance. So there's one, here we had one opportunity to actually have a short trade in gold. Then the market moved lower, and once again we had an area where there was market found support here for a while. But then once the area was penetrated, the same area acted as a resistance. And on, this repeats and repeats in the markets. Here we had an area of support, it was penetrated, and the same area is now a resistance. You might be asking if this same analysis method can be used in other assets too. I've used a gold chart here, but let's go and see what the oil charts look like. So here we have a daily chart in US oil. And again, I'm going to use a box to highlight an area where we had a support. The market was finding support here. And then this area was penetrated. And roughly the same area was once again used by the markets, or by the traders, I should say. So here we have the support, then comes the penetration. First there was some fluctuation around the area, which kind of shows you that anything and everything in the markets and in technical analysis is far from perfect. Otherwise everybody would be a millionaire. All of these would be found, these kind of patterns and trading opportunities would be found so easily. But there are times when things don't work, and that's actually better, because then there are other times when these can work. If something works all the time, it stops working, because that's the nature of the markets. The markets will actually degrade any anomaly over time once it's more and more known and well known. So that's why you can see the markets changing all the time. But here we had the same area acting as a resistance, and then we had the same area again acting as a resistance, and the market moved lower. So oil has traded quite a bit lower from those levels. If we look at these, the latest move is, it was over 10%, actually over 11%. So a significant move. Then you might be asking, is this something that can be actually used in small time frames as well? I've used market structure here in two big time frames, daily time frames, and obviously these lows are also the weekly lows. So it can be used weekly and daily charts. That's the conclusion here. But can it be used in intraday time frames? Let's go there. I'll show you. It can be actually used there, and I want to show you how. What I have here is Dow Jones 5-minute time frame chart. As you can see, the market makes lower highs and moves lower, and then comes a point where we have some support here, which is then used as a resistance. Once the level or the area is penetrated, this same market structure area is used to open short trades. So there's an example. It does work in 5-minute time frame as well. And then the market starts to kind of lose the downside momentum here. It starts to move sideways, and then here we have basically kind of ranging price action here. Let's draw another box here. So that's the upper end of the range, and here's the lower end of the range. And then the price keeps on drifting during the Asian session, and I have to actually squeeze this a little bit. Let's see if I go here. Okay. Now you can see that the market creates these ranges every now and then. We have another one here, and that's the upper end of the range, and the lower end of the range is here. Okay, so now we have an example of a downtrend market structure and two examples of sideways moves or ranging price action and market structure there. Let's see how this works in uptrends. As you can see, the market rallied higher, created higher high, and this resistance here, how do we know it's resistance? We know because there was selling there, the market moved lower. And this general area here was then, it created a support area once it was penetrated, and the buyers came in here and pushed the price higher again. This was repeated here. Another market structure level was created. And then the market pushed higher, found support here, and this point was also used as a support here. So you can see that we have these forming over and over again in the markets. So these market structure levels or areas are highly important, both in uptrends and in sideways moves and in downtrends. So hopefully you found this helpful, and if you have any questions, please send us email on support@tiomarkets.com. Thanks for watching this video. It was absolutely great to have you here. If you have any questions about trading or markets, you can always email me at support@tiomarkets.com. And please subscribe to the channel and turn on those alerts so that you get to know when we publish new videos for you.